In today's lesson, we're going to look at 3 serious accounting mistakes that many small business owners make. Mistakes that silently hurt their businesses and limit their growth. Everything we're sharing here comes from real-life experiences and patterns we've observed among small business owners over time. So, grab a seat, relax, and let's get started. Number 1. Seeing accounting as something only for professionals. Many small business owners believe that accounting is something only professionals should handle. They see it as a highly technical subject meant only for chartered or certified accountants. To them, accounting is like medicine or pharmacy, something you shouldn't touch unless you've gone through years of formal training. Now, it's true that certain areas of accounting, such as tax filing, auditing, or corporate compliance, do require professional expertise. Those are specialized areas that accountants are trained for. But here's the key point. Accounting is far more than a profession. It's a language, the language of business. It's the tool that tells you what's really happening in your business. It helps you see where your money is coming from, where it's going, and whether your business is truly growing or just surviving. Think about it this way. Marketing is also a professional field. Yet every business owner learns some level of marketing because it's essential for survival. You may not be a marketing expert, but you still know how to promote your products or talk to customers. In the same way, every business owner needs to understand basic accounting. You don't have to be an accountant, but you do need to know what your numbers are saying. Now, let's go back in time for a moment. Did you know that modern accounting wasn't invented by professional accountants? It actually began with merchants, ordinary business people in Venice, Italy, during the 13th and 14th centuries. Back then, Venice was one of the busiest trade centers in the world. Merchants were buying and selling across Europe, Asia, and Africa. They had ships filled with goods like spices, silk, and precious metals. As their businesses grew, they faced a major problem. They couldn't properly track their transactions. Money was flowing in and out, and many of them were losing track of what they owned and what they owed. So these merchants came up with a method to record every transaction clearly. What came in, what went out, and what was left. This simple idea became what we now call double entry bookkeeping. It was later popularized by an Italian monk named Luca Pacioli, often called the father of modern accounting. But the truth is, it all started with business owners who simply wanted to manage their trade more efficiently. That's the spirit you should have as a business owner. Don't see accounting as something for others. See it as a tool that belongs to you, a tool that helps you understand and grow your own business. Number 2, thinking you can run a business without accounting. This is another serious mistake. Many small business owners believe they can manage their businesses without keeping proper accounting records. They rely on memory, guesswork, or assumptions. They say things like, "I already know how much I make," or "I can keep everything in my head." But that's one of the biggest traps in small business management. Every successful business stands on 3 major pillars. 1. Operations, what you produce or sell. 2. Sales and marketing, how you attract and retain customers. And 3. Accounting, how you measure and manage your results. But unfortunately, many business owners focus only on the first 2, production and sales, and ignore accounting. That's like trying to sit on a 3-legged stool that's missing one leg. You might balance for a short while, but you soon fall. Without proper accounting, you can't truly know how your business is performing. You might be selling more, but that doesn't always mean you're making more. For example, imagine a bakery that sells 1,000 loaves of bread daily. Sales look great, but if the owner isn't tracking costs like flour, sugar, electricity, and wages, they might be losing money without realizing. That's why accounting is called the heartbeat of a business. It gives you clarity. It tells you what's working, what's not, and where your money is really going. Running a business without accounting is like driving a car without a dashboard. You may still move, but you'll be moving blind. You won't know your speed, your fuel level, or when the engine is overheating until it's too late. The moment you start keeping proper financial records, something powerful happens. Your decision-making improves. You start seeing patterns. You know which products bring profit and which ones just drain cash. You begin to control your business instead of your business controlling you. So stop thinking accounting is optional. It's not. It's an essential part of business management, the very foundation that keeps your business alive and growing. Number 3. Seeing accounting as mathematics or something too technical to understand. This is the third common mistake. Because of that mindset, many business owners avoid it completely. They say things like, "I'm not good with numbers," or "math was never my thing in school." But here's a secret. Accounting isn't really mathematics. Yes, it uses numbers, but those numbers are not there for complicated calculations. They are there to tell you a story, the story of your business. Every number in accounting represents something meaningful. Your sales tell the story of how your products or services are performing. Your expenses show where your money is going. Your profit or loss reveals how efficiently your business is being managed. When you begin to see accounting this way, it becomes easier and even enjoyable to track. Let's take an example. If your sales are growing, but your profit is shrinking, your business is sending you a message. It's saying that your costs are eating into your gains. If your cash is always tight, even when sales look good, your business is whispering that you have a cash flow problem. If your debt keeps rising, your business is telling you that your spending is outpacing your earnings. Accounting helps you listen to those messages. It's not about arithmetic, it's about awareness. So instead of seeing accounting as a technical subject, start seeing it as a storytelling tool. Your business story written in numbers. Once you adopt that mindset, accounting stops being scary. You begin to appreciate it as a clear, simple way to understand how your business is doing and how you can make it better. Thank you for spending time with us today. Let's quickly summarize the 3 key points again. Number 1, stop seeing accounting as something meant only for professionals. It's a tool that belongs to every business owner. Number 2, never run a business without proper accounting. It's like flying blind. You need the numbers to make smart decisions. And number 3, don't see accounting as mathematics or something too technical. It's simply your business story written in numbers. When you understand your numbers, you understand your business. When you track your finances properly, you make better decisions. And when you use accounting as a management tool, you give your business the clarity and confidence it needs to grow. Accounting isn't about paperwork. It's about power. The power to see clearly, plan better, and take control of your future. You've been watching Accounting for Small Business Owners, where we make accounting simple, practical, and useful for everyday entrepreneurs. See you in the next lesson.